myself Vaibhav. This week has been phenomenal for the Euro USD and lot of volatility has been there on account of the US presidential elections. As the things stand, we are seeing the chances of Mr. Biden clinching these elections are rising and he's pretty close to the 270 mark. But of course, till with the final results, final tally comes in, we can't really say for sure, and this volatility is likely to stay for next couple of sessions. But as of now, the bulls are looking really in charge, and I think the only way for Euro USD to go seemingly is on the upside. So in next couple of sessions, we can expect the Euro USD to get towards 1.19 and eventually even the 1.2 looks on the horizon. If you consider the trading context for the day, this has been the eventful day. We earlier in the day during the European trading hours, we got this Bank of England's monetary policy announcement. And here, as expected, the Bank of England left the interest rates unchanged at 0.1%. But what was surprising was the increase in the quantitative easing. The expectations were of the increase to the tune of GBP 825 billion, but instead of that, the Bank of England has raised the quantitative easing to now the UK pound 875 billion. So this is a lot more stimulus, and I think this is because the outlook for the economy has nosedived, and for the fourth quarter of this year, now the Bank of England is expecting the GDP to contract a lot more than the earlier estimate, and as a result of that, they are upping their game and standing ready to do the firefighting. So we will have to see how these measures will span out in coming months. On the other data front, we also got the retail sales number for the euro area, and here the effect of rising coronavirus cases, and because of that the consumer confidence going down is now getting visible, and we have this decline in terms of month on month of -2%, whereas in terms of year on year the magnitude of growth has halved and now it stands at 2.2%. For the US session, we will be getting the initial jobless claims for this week, and the reading is likely to stay above the 700,000, and I think it will be in tune with the last couple of weeks readings, where the average claim has been around 787,750,000. So I'm not really expecting big deviation, but of course we will have to be mindful of these rising cases of the coronavirus, the COVID pandemic, and the likely impact on the job market. Later in the day, we are also scheduled to get the monetary policy announcement coming in from the US Federal Reserve. And here, this weekend, more or less, is being expected to be a non event, as we are not really expecting any big shift in the monetary policy on the interest front as well as on the asset purchase program. So the QE and the interest rates are likely to be left unchanged. The interest rates stand at the in the band of 0 to 0.25%, and it is more likely to stand as it is. And as I said, the QE is also not likely to be tinkered with. So we are not really expecting any big moves, but of course it's a Federal Reserve's monetary policy announcement, and we always have to be ready for any surprise. And the big moves can be expected if any deviation comes in. And of course, we will have to watch out for the commentary on the economic situation prevalent in the United States, and a lot is going to be dependent on how the Fed is perceiving the current developments and their likely impact on the economy. Now let's shift our attention to the technical segment. Here we will first cover the Euro USD's technical outlook, and then we will move on to the USD JPY. Let's start with the Euro USD's technical outlook. This is the daily time frame chart, and here the Euro USD has rebounded from the identical levels, and it has found good buying momentum closer to the 1.160, and this reversal has been fairly sharp. Of course, this is the yesterday's big move, and in which we can see that Euro USD almost moved more than 150 pips during the course of the day, and it was pretty much expected given the day being of the US presidential elections, and now the counts are coming in. And as I said in the introductory remarks, the likelihood of Democrats winning this election is a lot higher, and the passage of big stimulus package is also going to be on cards if the Democrats win this election. And as a result of that, we are likely to see the weakness persist in the United States dollar, and the euro is going to be one of the beneficiary of this tilt, and we are seeing that's what is going here in the Euro USD's technical chart. We are seeing renewed buying momentum in the Euro USD, and it looks like this immediate swing high established just little below the 1.19 is going to be the next target for this upward rally, and in due course of time, if things hold well, we can even expect this prior swing high to give way to new swing high being established even above 1.19. But for us, the intraday perspective, we will be looking at if there are any emerging opportunities for us to go for the trade setup in basically on the shorter time horizon, like the day or maybe couple of days at max. And of course, the underlying momentum is on the bullish side, so we will be looking for the buy trades only. We are not really going to go for the contra trend trades here. So if we consider the pivot point formation as well as the regression curve, we can see these big moves here which are making the job of technical analysts difficult. The one thing is for sure that this now uh, change of fortunes for Euro USD is looking quite sure, quite confirmatory, and if we consider the this central pivot point of the this month's pivot point series, we can use it as a marker for determining whether to go long or whether to sit on the sidelines. And if you see the price action, it has even crossed above the upper band of this regression curve, which is still tilted on the lower side, on the downside, is also indicative of the fact that the big shift is underway, and this prior bearish trajectory is now likely to give way to more bullish momentum moving forward, and we should be getting ready for this possibility while utilizing the levels offered by these technical systems. So here our technical analysis is going to use this central pivot point which is there around 1.172 to keep in mind that anything above is going to be considered bullish in traditional sense of the way, and we will be looking for the buying opportunity as long as the price is holding well above it. So if we consider the buying opportunities, I think we will have to target this 200 SMA zone, but as the things stand, we are not really close to that price zone. We are almost like 80 to 70 pips away, and earlier in the day the price action was fairly close to that, but now the things have moved on, and if we want to gain the fresh entry, I think we will have to wait for the fresh correction and then consolidation closer to this confluence zone of the 50, 100 and 200 SMAs. In due course of time, the 50 SMA is also now expected to cross above this 200 SMA, and that will make the formation of the golden cross, and even the 100 SMA is going to catch up if the price action sustains itself above these crucial price level. So looking forward, I think the next buying opportunity is going to arise when we see some sort of correction happening in the Euro USD, and if we get the Euro USD closer to the 50 SMA zone and it is still trading above this 200 SMA, then I think we will be in good position to go for the long trades, the buy trades in the Euro USD while keeping the stop loss anywhere below this 100 SMA, and that should hold well as the things stand, as the magnitude of this upward momentum is quite strong, quite big, so we can expect this momentum to last for at least next couple of days, and as a result of that, we can be confident, fairly confident of going for the long trade. But as of now, I am not really in a position to pinpoint the exact entry and exit point. The only thing we can say is that we will have to rely on this SMA formation for the immediate buy and buy side trade, and where we see that the risk reward ratio is in our favor, and the probability is also good. We can get involved while keeping the stop losses sharp to make sure that we don't really lose too much money in case we happen to be wrong, our anticipation happens to be wrong. So we will have to see how things shape up, and as long as the price action is above 1.172, we can be fairly confident of going in for the long trades, provided we get the desired entry point. Now moving on to the USD Jpy, the trajectory is exactly opposite of the Euro USD. We are here looking for the sell side trades, the shorting opportunities for the USD Jpy, as it is looking to break below the prior support areas and new swing lows are being established. The formation has been bearish for a while now, and this yesterday's reversal after getting close to the resistance zone also confirms this fact that most likely the USD JPY is going below these prior swing lows, the support areas, and this time around we are more likely to see it even diving towards 103 or even below that in due course of time. So for us, the opportunity to go for trades are going to be on the sell side, and we will see how things are shaping up on the shorter time horizon. The regression curve as well as the pivot point series, both these technical factors are pointing to the continued strengths of the bears, and we should do well to keep that in mind and not try to go for any buy trade just because the USD JPY is at its lowest level in a while now. And instead of that, I would say that even after this fall, the momentum is still on the bearish side, so it will be prudent for us to play with the trend and not take undue risk. But of course, the key thing is finding the good opportunity to go short and make sure that the risk reward ratio is also in our favor. So that is what makes our job difficult here, as we have to figure out what are the optimum levels, and if we use these both the technical indicators, then the next resistance zones comes into play closer to the 105, and we are not really anywhere close to that, so 100 pips stop loss is not something I personally would like to suggest to keep as the stop loss. So instead of that, it would be better for us to maybe wait on the sidelines and rely on the lower time frame charts like this hourly setup, in which we have the 50 SMA crossing below the 200 SMA closer to the 104.6 price zone. And if we see this confluence of 50, 100 and 200 SMAs around 104.5 to 104.6 price band, we can utilize this price band as our desired entry point, provided we are fortunate enough to see some sort of retracement taking the USD JPY back to the resistance zone. As the things stand, we will have to wait a while now, and I think in just last hour we saw sharp spike, but again the selling momentum pushed the USD JPY lower. So it will be interesting to see if in today's session we can get that kind of opportunity where we will be looking for shorting the USD JPY anywhere closer to the 104.5 to 104.6 price zone. And as I said, the risk reward ratio also plays an important role for us. So if we are going to go for the fresh trading opportunity closer to this price band, I think the stop loss of around 104.9 should be good enough. And on the lower side, we are expecting the break below the 104, and that is going to provide us the risk reward ratio, which will be even better than 1:2, as we are going to take the risk of around 30 to 40 pips. And in lieu of that, we will be targeting more than 60 to 70 pips on the lower side. And if things go well, we might even see the decline towards 103. So that is the possibility emerging in the USD Jpy, and its failure to sustain its earlier upward trajectory makes the matter of the bearish turnaround again more promising, and we will have to be ready to exploit the situation to our advantage if we get the opportunity here. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Subscribe to the channel to stay updated on the happenings in the financial market. Goodbye.